Welcome to This Explainer. If you've been following the Japanese market lately, you know exactly what happened on May 1st. Mitsubishi Corporation dropped a financial disclosure that has everyone talking. And if you know anything about Mitsubishi, you know we aren't just talking about a regular company here, we're talking about a colossal economic engine. Right now, under their Management Strategy 2027, this giant is going through a massive, historic transformation. So today, we're going to strip away all the complicated corporate jargon. Instead, we'll focus entirely on the two things that matter absolutely the most to you as an investor: their incredible cash flow generating power and their super aggressive stance on shareholder returns. Let's dive into the data and see what's really going on.
Here's how we're breaking things down today. First, the giant's next move. Second, their V-shaped profit recovery. Third, investing for future growth. Fourth, rewarding shareholders. And finally, the long-term roadmap.
All right, Section 1. The giant's next move, decoding Management Strategy 2027.
To really grasp what that May 1st data means, we've got to look at Mitsubishi's Management Strategy 2027. And let me tell you, this isn't just some minor corporate tweak, it's a fundamental reimagining of their entire global business. They're adopting a heavily human-centric vision, which basically signals that their strategy isn't merely about cold, hard numbers anymore. By shifting their portfolio toward things like sustainable energy, smarter food distribution, and digitally enhanced consumer services, they're literally transforming from a traditional trading house into a dynamic creator of societal value. But, as we all know, to fund a vision this grand, you need some serious capital. Which brings us to Section 2, V-shaped profit recovery, unstoppable earning power. Now, when the recent earnings report came out, it definitely had some investors pausing. We saw a dip in net profit, landing at 800.5 billion yen for fiscal year 2025. But don't let that fool you, because that dip was largely due to fluctuating resource prices. The real story here, their target for 2026. They're going after an incredibly ambitious 950 billion yen. That's right, they are challenging their own past records to create this beautiful, classic V-shaped recovery curve, and they're actively engineering this growth from the inside out. So where does all this confidence come from? It comes from this massive number right here, 1.25 trillion yen. And to be clear, this isn't just net profit, this is their planned operating cash flow for 2026. By driving their hard cash generation up to this level, Mitsubishi is basically building a financial fortress. They are making themselves virtually immune to the sudden, unpredictable shocks of global resource price fluctuations. It's an absolute game changer.
Moving right along to Section 3, investing for future growth, building the next profit pillars.
When you're consistently generating 1.25 trillion yen in cash, you have an incredible strategic advantage. You have the sheer firepower to build out your next massive profit pillars. To that end, they have committed a staggering 800 billion yen to the North American shale gas business alone. Think about that scale for a second. By securing a massive stake in global energy right now, they're positioning this to become a major profit driver from fiscal year 2027 and beyond. But that massive energy investment is just one piece of the puzzle. Their future growth actually relies on three main pillars. First, as we mentioned, the North American shale gas expansion. Second, the highly anticipated LNG Canada project, which is finally launching into full-year operations. And third, they are heavily deepening their non-resource sectors. We're talking serious investments into areas like salmon farming and heavily optimizing their food distribution networks. I love this because it perfectly illustrates their dual approach. It's a brilliant balancing act. On one hand, they're tackling global energy and environmental initiatives to secure the macro-level needs of the entire world. But on the other hand, they are grinding out profits in everyday life foundations, the daily essentials, like what we eat for dinner. By balancing mega projects in natural gas with highly reliable, steady profits in grocery logistics and salmon farming, they've built a muscular portfolio that can turn a profit in basically any market condition.
Let's get into Section 4. This is the really fun part, rewarding shareholders and a clear focus on capital efficiency.
All right, here is the payoff for the retail investor. Mitsubishi's stance on returning value is incredibly clear, structured, and frankly, remarkably aggressive. They are executing what's known as a progressive dividend policy. That means they commit to either maintaining or increasing the dividend. They never cut it. Just look at the timeline. We see a reliable, steady climb from 100 yen in 2024 to 110 yen in 2025, and now they're projecting up to 125 yen per share for the 2026 fiscal year.
Let's just park on this anchor number for a moment, 125 yen. If you're a Japanese retail investor, This progressive dividend target is incredibly attractive. Why? Well, it offers a rare sense of absolute predictability in a highly unpredictable market. When you know a corporate giant is backing its payout with 1.25 trillion yen in raw operating cash flow, that 125 yen dividend isn't just an empty corporate promise. It's a mathematically backed near certainty.
But wait, they aren't stopping at dividends. On top of that direct cash payout, the company is actively returning value to you through a massive, already announced 1 trillion yen scale share buyback program. They are flexibly buying up their own stock. And as you probably know, that reduces the total number of shares on the market, which inherently increases the value of the exact shares you're holding in your portfolio right now. Now, as a smart investor, you've got to be asking yourself a question here. An 800 billion yen investment in energy? A progressive 125 yen dividend? A 1 trillion yen stock buyback? Are they just blowing through cash recklessly? Is this safe? The short answer is absolutely yes, it's safe. This is highly calculated capital allocation. Just look at their net debt-to-equity ratio. It sits at a phenomenally low 0.38 times. This proves that despite splashing out massive cash for strategic investments and aggressively rewarding their shareholders, their financial health remains exceptionally sound. They were funding all this growth primarily through the huge amounts of cash they generate every day, not by piling up dangerous corporate debt.
And finally, Section 5, the long-term roadmap, capital logic in action. We've seen the cash flow, we've seen the 800 billion yen investments, we've seen the ironclad commitment to that 125 yen dividend. What this May 1st data proves beyond a shadow of a doubt is that Mitsubishi Corporation is successfully executing its capital logic. In a very uncertain global economy, they are offering investors a rare combination: rock-solid downside resilience with massive upside growth potential. They are doing exactly what they promised they would do.
Just a quick reminder, this explainer is for informational purposes only and does not constitute investment solicitation. Always refer to Mitsubishi Corporation's official IR page for details and be sure to do your own research. But as this corporate giant fully awakens its earning power, the question you've really got to ask yourself is, are you positioned to ride the wave of this historic transformation? Thanks so much for joining me today.